School is in session. What does that mean for all of the homeowners who wanted to sell but are still in the market now that school has started throughout Metro Atlanta, right? Because failure rates are up, pendings are down, traffic is down as well. So, what does it all mean? We're going to dive into that and more in this month's edition of Atlanta's Housing Market Update. Let's jump right into it. Let's start with mortgage rates. So, mortgage rates have been all over the place. I was at this real estate conference last week and I was getting text messages from clients who are savvy, sophisticated with the markets, and they're watching interest rates and they saw them trend all the way up to 6.83. And it was like, gosh, Terence, are these rates going to go up to 7% again? And it's like, well, they might be, but these rates have been trading in a channel for the past several months either way. And there was an article that came out literally today, it's August 13th, from homes.com touting that rates are down for the first time in 5 weeks, the weekly averages. So we're at 6.67 now. Rates were a little bit higher last week. It's not significantly higher, but there's always going to be that ebb and flow of rates. And right now, rates are in that 6.5 to 6.8 channel, and they're just stuck there, right? And they've been stuck there for a while. Earlier this year, they were in the fives for a breath, and then missiles started flying in the Middle East and they shot up. But where they shot up to, they came back down and they've been on an upward trajectory. So I'm not prepared to say that this little bit of a pullback in rates is going to be substantiated over the long run. I think we're in the 6.5 to 6 to 3/4 range to finish out the year. And we're not expecting any rate cuts with the Fed. You're not seeing any of the indicators that would help that pull back necessarily, right? So that's something to watch. I know there are a lot of people who would like to be able to buy a new house, but they might be on the fence. You might be on the fence about wanting to do something because you've got most Americans have an interest rate of 4% or less. The house that we sold in October had a rate of 2.5, and giving that up was tough. So I get it. But if you've got 2.5, 2.75, 3, anything under 4, and you're carrying hypothetically a bunch of like credit card debt, student loan debt, HELOCs, all of this other debt, there was a study that was done. I'm not going to cite it on this video, but the blended interest rate that the average American is carrying right now is right around 6.2 to 6.5%. So there are strategies where if you are in a situation where you've got the low interest rate and the house just doesn't meet your needs anymore, you could be on the fence about wanting to, they call them the golden handcuffs, right? You don't want to get rid of that rate because you don't want a rate that's 6.5, 6 3/4. So it's stopping you from, I guess, in a way, upgrading your life and quality of life by, if you have a house that's too small or it's not in the area that you want to get into a better school district, hypothetically, or there are a lot of reasons why the house that you own currently might no longer meet your needs, right? Well, if you are carrying some of this other debt, I think I'm going to do a whole video on this concept of the blended interest rate and some of the strategies that you can use to cash out the equity that you have in your home today via a sale to take care of some of that so that you can get into a house that actually makes more sense because it mounts out and there's, yeah, you know what? I'm going to put together a whole video on this. It's going to come out probably in the next 2 weeks or so. So be on the lookout for that. So rates all over the place, not expecting them to come down. Golden handcuffs continue to keep people on the sideline. There are a lot of houses that could have come to market this year that didn't because, again, people don't want to trade in the lower rates for the higher rates. So median price, we're at 421. We've been at 420 for the longest time now. When you take a look at this chart, this is core Atlanta counties. So 420, 420, 420 this month, 421 for single family. That's the blue line. The charcoal line is going to be your townhouses, and then the gray line is going to be condos. So single family continues to be even keeled, and it's been like that across the 12 county region that makes up core Atlanta. Previous videos, we never had Henry County. There's been requests for that. It's a part of this data set now. So you'll see that when we break it down by county. But 420 for the longest time, you got to go back to like June 2024. And June 2024, a lot of experts will say that that was the top of the metro Atlanta market. And we're seeing a little bit of a pullback in certain areas. So the bottom was somewhere in 2012. And this is apparently the top. From a single family perspective, that seems to be the case. Take a look here at townhouses, and the top was, I mean, it looks like April 2025, and prices have been trending down from 375 down to 365 today, but it's been 365 for a couple of months there. And then condos really maxed out at like 299 back in May of last year. Now we're at 288. So you've got definitely a pullback depending on if you're in a attached asset class, right? Townhomes and condos both have seen it. Single family continues to be pretty even keeled, but it's up just a little bit this month. So let's dive into that a little bit more. Now, this is a chart that I've been including in recent videos that shows the difference between single family new construction homes versus resale. So new construction right now is at 466, 465.5, so rounded up to 466, and pre-owned or resale, depending on how you want to call it, is 415. Now this 415 has trended up too because it was 410. And even if you look at where the highs were previously, April, May of last year, where we talked about highs for the townhome and condo market, well, you had a little bit of a crab walk here at 410, but most recently, the resale median price of single family homes has gone up. So we're at 415. So that's really interesting, but there still is a $51,000 spread in median price between resale and brand new construction. Moving on, let's take a look at where we are by county. So Forsyth has the highest median price by county. We're at 620,000. Clayton County has the lowest at 242,000. There are some counties where this year the median price is up. So you take a look at Fulton, for example. That's a big jump up. This past year, in July of last year, the median price was 505 and it's up to 551. So that's practically like a 10% increase year over year for Fulton County. And then other places like Fayette County was 500 last year, it's 515, so that's a jump up. Cobb County is up a little bit too, 460 up to 465. And you've got some other places where the median prices come down just a little bit. Rockdale is up incrementally as well, so, and Cherokee as well, right? So Forsyth down, Gwinnett down just a little bit. Same thing with DeKalb and Paulding. So you have some fluctuations depending on where you are in the county, or in the metro. Which county you're in the metro is what I wanted to say. Here's where prices are rising and cooling based on cities. So I wanted to break this down because Fulton County is a very, very expansive county, and people automatically assume that it's like Alpharetta, Milton, Johns Creek, Roswell, Sandy Springs that is carrying the appreciation upticks when you look at that 10% increase year over year. But take a look at South Fulton. South Fulton, and when I saw that, I wanted to go back and look at the data to make sure that wasn't a typo or the sample set was too small and it's skewing the data, but it's not. Home prices in South Fulton are up 11.5% year over year. So that city is booming. Now the prices are more affordable in the city of South Fulton. And so when you're looking at where the market is, maybe one of the explanations is if you can get a little bit more house for your money, a little bit more land, because houses aren't necessarily one on top of each other. You get to breathe a little bit more. There's some nice buying opportunities in South Fulton, and people are taking advantage of those. So that's interesting. So here on the side, South Fulton, Peachtree Corners, 8%, Ball Ground 7.2, Brookhaven 6.1, and Waleska up in right over here in Cherokee County 5.5%. And where prices have trended down a little bit, Auburn down 11.5%. I mean, that is just a portion of that is in Gwinnett and then it spills over. So that's why it's included here because we're including Gwinnett data. Stone Mountain down 8.5%. Lilburn, same general area, 5.8%. Douglasville on the west side, 5.4%. And Morrow on the south side of town, 5.2%, right? But green is up and yellow is kind of standstill, and then red on this chart, orange red is downwards on price. So you'll be able to take a look at this. we're in the process of rebuilding our whole website too, and I'm going to have these stats on that site moving forward. So if you'd like to dive into like stats for the local area, I've got some really cool stuff coming that we're building. So I will announce that in the next market update video when it's ready for launch. So that, and I'll link to it as well, but it's not ready yet, but it's coming. It's really nice. Okay, moving on. So and this is all for single family. So let's take a look at new listings. So blue is the current year, and then so use the darker line here, the charcoal line is going to be 2025, and then the lighter one is 2024. So we're ahead of 2024. We're behind on new listings compared to this time last year. So roughly 88, 88. That's a lot of eights for new listings that hit the market in Metro Atlanta in July. And then you see where those listings are. There's a pullback, quite a big pullback in DeKalb. Some new listings coming to market in Henry, Cherokee, Forsyth, for instance. Fayette County had more than last year, Cobb County as well, but pullbacks in Fulton, Gwinnett. But DeKalb is the biggest pullback here. I mean, they had 792 from 964 the year before. That's like 170-ish, 172 less properties come to market in July. So that's what I was mentioning in the video. There are a lot of people that would have liked to have sold their houses, but those golden handcuffs are keeping them sitting still. And those are houses that, inventory that never made it to the market, basically. So active listings, we are at a high here. So 21,600. This time last year, we had 21,328. So that is just a little bit higher, but nonetheless, it is the highest it's been over the past 3 years. And that's for core Atlanta counties, all property types. And it doesn't matter if it's like new construction or resale, it's everything. So 21,000, there's a lot of houses on the market. We'll see when we look at the showing data in a little bit that people want to see more houses before they make decisions because they have a lot of houses to look at. So broken down by county, again, DeKalb. So there were less new listings coming to market, which also means that if you have less properties coming to market, your actives are going to be down too. But that's like a 534 property spread year over year in DeKalb County. Now, DeKalb County is a huge county, so that's a lot of properties that have that are not on the market this year compared to last year. Let's just put it that way. Gwinnett has more. Pullback in Fulton. Cobb County has more. So there are a lot of counties where there's more because, of course, year over year we're up. But this surprising, considering that you know you go back to the other slide, you see we are outpacing last year, but the two biggest in-town counties, Fulton and DeKalb, both had pullbacks, and the suburban counties have all had, for the most part, pushes forward. Not always. You look at Douglas, for example, there's a little bit of a pullback, Clayton, a little bit of a pullback, but in most of these other counties, the suburban counties, inventory is up. So pending listings, look at that. That looks like it's cratering right now. I'm going to add a little asterisk to this because whenever I pull the next month's data, we always pull the previous months as well, making sure that everything's accurate. That number I expect is going to go up. In last month's video, it also looked like that too. And then once, put it this way, properties are pending in the system. Sometimes it takes agents not just days, but weeks. And then because of that, it takes the MLS a couple of weeks to get caught up with the transactions that actually close, and then they enter the data. So this is going to be revised upwards. Now it looks like, oh my gosh, no one's buying houses at all, but I'll tell you that that's not correct. This one here was also lower last month if you go back and watch the video, and it settled at 4,980, which is really right there with the previous year. It was another 54 properties. So it's not like that's not cratering by any means. So when you look at that, grain of salt, be aware when I do this video next month, we'll come back, I'll point that out. Last year was 4,700, the year before 4,799. We're probably going to be somewhere around 4,600 and change, I would think. So we'll see if I'm right. Pending listings by county. So DeKalb, Fulton. So new listings, actives, and pendings all down inside the perimeter in Fulton and DeKalb. But they're also down in Cobb County. They're also down in Gwinnett. Again, we're going to take all of this data with a grain of salt because of the lag with pending properties making it into the MLS in a timely fashion. So let's get it together, people. You've got a listing, it closes, get it closed out, get your paperwork turned in so that we can have accurate data sooner in the month. That would be much appreciated. Okay, closed listings. This is also probably going to adjust because you've got pending listings that haven't yet closed. But you take a look at it. Last month, we had more closings than the year before, just a little bit, and quite a bit more compared to 2024 in July, right? So here it's trending a little bit lower, but again, pendings and closings have a direct relationship. So we're going to need to wait to see what that resolves at once the data is accurate. I don't think it's going to be that lower. I think it's going to be the same thing or maybe a little bit more. So closed listings by counties, you can take a look at that there. Moving forward, listings that failed to sell. Now this here is accurate because every time a property expires or gets withdrawn, that gets pulled immediately. So that data registers, so I can pull that. So, there's quite of a, a remarkable jump up from 2024 to 2025. So compared to 2024, 2026 also is a big jump, but year over year, it's the same thing, right? So withdrawns are approximately the same. Expireds, maybe there's a little bit more. So 1714 last year, now it's 1747. Like that's a rounding error almost. It's a very, very small percentage up. You take a look at withdrawns, there were slightly less withdrawns in July this year than there were last year, but failures as a whole, it's practically the same thing. That is still a large number of properties that are failing to sell, and they're either expiring, and when they expire, either they relist with the same agent, keep the house off the market, they get frustrated and they choose not to sell, or they find a new agent and end up going back to market. Withdrawns, oftentimes it's two reasons. The agent is withdrawing and they're going to put it back in as a fresh new listing with a new price to make it look like a new listing, or the seller's like, hey, I know our term finishes in a couple months. I'm done. Like, I'm not going to do this. Just withdraw it from the market. So that's what withdrawals are. Now, broken down by area, the only place on here, there's really a couple where it's up year over year. You take a look at, Gwinnett, that's up roughly, 9%. You take a look at Cobb County, that's up a little bit there too. Forsyth County is up. So you're looking at the big counties that are to the north, northwest, northeast, a little bit of Metro Atlanta, in the suburbs, and they all have failure rates that are going upwards. So Cherokee County is the same thing. On the south side, you've got Henry. Paulding's less than it was this time last year. That's 2 counties over, right? Douglas is less, Clayton is less, Rockdale is less, Fayett's up a little bit. What do those other counties have in common? The Henrys, the Pauldings, the Douglas, the Claytons, and the Rockdales is that the real estate is a lot more affordable. So when something comes to market, it doesn't fail quite as often. Now look at DeKalb and look at Fulton. What I'm seeing when I'm looking at this is I'm looking at properties that are in the city, right, inside the perimeter. There are fewer properties coming to market. Because you have fewer properties coming to market, and it's still a desirable place to live for proximity. If you work in downtown Buckhead, Midtown, any of those locations, right, you want to be close to the action. So it's a more vibrant market. You take a look at the suburbs, and now, especially that school started, you're going to see that those are more directly affected by school. But you're also seeing a lot of these failure rates up in the suburbs, right? But they're the expensive suburbs, the Cobb, Cherokee, Forsyth, and Gwinnett. The South Side suburbs and west for Douglas are doing very, very well. So interesting to see. Now, where listings fail. So we talked about the South Side doing well, and you take a look at this and you see a lot of red and orange on the South Side. Terence, what are you talking about? Well, I'm looking at a county, and now I'm going to show you zip code specific data. So of course it's going to vary because real estate, as you know, is hyper local. And if you didn't know, hey, real estate is hyper local. So it makes a difference. So the green pockets are where you have properties that are succeeding more often. So for example, you look at Peachtree Corners, where is it? Up here. There it is, Peachtree Corners, right? Peachtree Corners, 9 out of 10 listings are selling. Only 1 out of 10 currently are failing. That's an awesome success ratio. You take a look at Lithonia, down here, 21%, 1 out of 5. That's good. Woodstock up here, 24%, 1 out of 4. Dunwoody practically um, right here, 1 out of 4. And Stone Mountain, which is surprising, but it's 30083. That is practically 1 out of 4 too. The other side of that, well, you take a look here, you've got West End and West Side. Like West Side there, look at that. Ouch, right? 4 out of 5 properties that go to market fail to sell the first time and they go through another listing cycle. 81%. That's a big difference. Compare that to Peachtree Corners, and they're two wildly different markets. But also in here, you've got West End, that's 6 out of 3 or 3 out of 5, and Cascade, and I mean, all of these areas, all the areas around the airport, to the north of the airport, basically are struggling right now. Southside Fayetteville, 30214. That's 3 out of 4 properties that are failing to sell. McDonough is struggling right now. Both zips here. So interesting. So this is one of the new heat maps. All right, let's take a look at active to close ratio. So we're going to look at single family, townhome, and condo. And we were at a ratio of 4 last month. It's still the same thing. So this here, you can see the ebb and flow, the seasonality, cyclical nature of closings in our market. Actives are going up right now. But that spread it was 4.0 last month, it's 4.0 now. So there are 4 active listings for every closing, put it that way. Now, here you take a look at the townhouses, it's a 5.3. So there are 5.3 active townhouses for every closing. And that's a gap that seems to be getting wider and wider. And then for condos, we're at 7.5. So 7.5 active condo listings for every closing. So that's a market that is experiencing a lot of turmoil right now. I'm going to jump into that. All right, so days on market. Single family, less than a month. Townhouses, 40 days. Condos, 49 days, right? So single family, we're at 28 days. It ticked up to 29 for June data. Back in July, it's back to 28, which is what it was since November of 2025. So single family homes are moving in less than a month. You need more time if you're a townhome, and you need a lot more time if you're a condo. And these are median days on market, so at the half of the market. So half of these properties have more days on market and half have less. So it's important to know, because if we looked at averages, and we're not in this data set, but if you look at averages, and there's some properties that wildly skew this because they've been on the market a very long time, which is why I don't like to look at average, these numbers are a lot higher. So by county, uh, I mean, that's interesting to add that third year, right? You take a look at that light gray chart, or the bar on the left of all of these data sets, and you can see just how low it was just 2 years ago. And then last year it jumped up. And for the most part, and this is only for single family resale. We're not looking at townhomes or condos for this specific chart. But it hasn't moved in any crazy fashion, with the exception of Fayette. So this time last year, go back 2 years, it was 12 days, then 18 days, and now we're up to 28 days. So you're starting to see a shift. Might that have something to do with Marvel moving their operations to the UK? Maybe if you're in like that Trilith area right now, there are a lot of houses. I was showing houses in Trilith. I guess it was 3 months ago at this point, and there were a lot of properties on the market in there. We have a client that's buying on that side of town, and it was just listings everywhere, right? So that is a big jump up. 18 to 28% is a really big year over year increase. But everywhere else, I mean, even Rockdale is lower. There have been some pullbacks. There have been some where the days on market, it's up a little bit. Like Gwinnett, for example, is up incrementally, 25 days to 28. That's not big. Cobb, 22 to 24. It's still roughly the same thing. It's all less than a month. But that's going to be something to keep an eye on, is Fayette. And then to a certain extent, Forsyth County as well. 24 to 29 is an extra 5 days at the median, year over year compared to last year, right? And that's for resale. This would be interesting to look at for new construction, because there's a ton of new construction that's sitting on the market in Forsyth County right now. All right, now let's take a look at which zips are moving quickly versus which are not. And got another heat map. So green, moving fast. Red, not so much. So look at that. Marietta, 30068, less than a week. That is predominantly Walton High School. So that's a district that is one of the strongest school districts in all of Metro Atlanta for high schools. Highly sought after. Homes in that district sell very, very quickly. Take a look at Decatur, 30033, 7 days. Peachtree Corners, 7 days. Northlake, 8 days. Tucker, 8 days, right? So 30345 and 30084, very, very fast moving. The opposite, Peachtree City and Fayetteville, all the way down here, not moving so quickly. So Peachtree City is 87 days on average, 3 months on average to attract a buyer and go under contract. That's what that means. Fayetteville is 66 days. Douglasville is 59 days. West Midtown is 55 days. And East Point, right by the airport, is 53 days on market. So you've got some other pockets too. Snellville, 52. Go out to Douglasville, 59. And then some of the other really fast moving, outside of the top five, Woodstock always moves quickly. Alpharetta, 30022, is moving quickly. You take a look at some of the in-town markets, and we talked about that, Northlake as well, but like Morningside, 10 days. So you see where it's concentrated, right? You've got like I-20 here, it's north of I-20, heading into the suburbs, and things are moving quicker, but not everywhere on the south side is bad news for days on market. Stockbridge, 22, Ellenwood, 20, take a look at 30094 Conyers, 22 days. So it's very pocket driven. Moving on, months of supply. 5 to 6 months is a balanced market. If you have more than 6 months of supply, the market favors buyers and negotiating. If you have less than 5 months of supply, it favors sellers. So single family homes, 3.7 for a while now. You go back to December and it's been 3.7 every single month. Now, and this is pre-owned Cortland counties, and obviously we're looking at the property types. So here, townhomes last month touched balance. They're still at 5 months of supply this month. So that's still, townhomes are going to feel either way like it's a buyer's market, especially it's very pocket driven, and there's some pockets that are absolutely strong buyer markets. Condo 7.1, that continues to tick up. So months of supply broken down by county. Rockdale is now in anything above 5 and this is single family pre-owns. So you're taking a look at Rockdale. Rockdale is in a balanced market. Henry's trending that way. Douglas starting to tick up that way. Fulton's had a little bit of a pullback, and then you've got some other 4s here with Clayton and Paulding. And the strongest seller's market is in Cobb County. So 2.8 months of supply for single family pre-owned homes in Cobb County. Those are moving very, very well. Now, if we take a look at buyer versus seller markets are going to be in green, and you've got some really, really, really strong seller markets. And then the buyer markets are going to be here in red. And the balanced markets are going to be the ones that are like yellow, gold, orange. Okay. So look at that. Fayetteville, 10 months of supply. Now this is for single family residences. Okay. So we're not talking about townhomes and condos, but if you own a house in Fayetteville in 30214, there's 10 months of supply. That's almost a year. You've got to go back to the crash years of like 2012, 13, 14, 2009, 2010. Those, like that 2009 to really 2014 to see that much inventory or months of supply on the market. So 9.8 it reminds me of that time quite significantly. So Southside has a lot of days on market, or not days on market, but months of supply, but it's not everywhere. Jonesboro, that's considered a seller's market. Again, single family, we're not talking about townhome or condos on this chart. And then, Peachtree Corners is just flying. There's only 1 month of supply. Something comes on the market in Peachtree Corners and it's gone almost instantly. That's interesting because over the past couple of months, this wasn't the hotspot, but it's become the hotspot now. So interesting nonetheless. So this on the north side, Waleska, parts of Cumming, Gainesville taking longer, Sugar Hill, Lawrenceville. Look at all that green. It's still very strongly a seller's market on the north side for single family. Moving on. Okay, townhouses. So townhouses, if the county or zip that you're looking at is gray, it's because it's not really known for townhouses, and there might be some, but there are less than 10 sales, and with less than 10 closings, we're not going to compute the number. It's going to be skewed. So that was my cutoff when I was looking at this. So where are townhomes lingering, where there's just a tremendous amount of supply? Well, Buford in 30519 has 11.4 months of supply. That is really, really high. You take a look at 30040 in Cumming, and that's 9.4 months of supply. You've got 9.7 in Fairburn and Douglasville, and then where's the market like moving very quickly for townhomes is Dacula. Let me know in the comments how you say that word. Dacula. 0.3 months of supply. You've got a townhome in that city, in this zip specifically, 30019. You price it well, it's gone immediately. You're probably getting multiple offers if you have that few months of supply. But in general, Dunwoody, 1.7 months, Virginia Highland, 1.8 months, Midtown, 2.4, and Ackworth on the Cherokee side, 30102, 2.4 months. So these are markets that are tight supply. There's not a bunch of supply. People want to live there. They're buying them. They're moving quickly. That's what that means. Condos, there's even less condos. So these are the areas that they're focused on. I'm going to zoom in a little bit to make this a little bit easier to see. And if you are in Lithonia, I'm always messing up the name of cities. So it is what it is. 9.5 months of supply. That's a lot. Okay. But condos in Buckhead, for example, there's over a year's supply if you're in 30326. That's quite high. There's over a year's supply in Old Fourth Ward, 30308, 12.8 months of supply. 30363, that's Atlantic Station, 12.1 months of supply. 30305, different Buckhead zip, right? 11.5 months, almost rounds up to a year of supply. Condos right now are in a tough spot. So Morningside 9.7 as well. I mean, that's right outside of Lenox, Virginia Highland, that area. So that's condos where they're moving quickly. Duluth, Alpharetta, Sandy Springs 30350, and Marietta 30008 near the square basically, and Roswell 30075, 3.6 months of supply there. Okay, moving on. Pending ratio. So pending ratio shows us how many properties, it's the absorption rate when you think about it. It's how many properties are going under contract out of a pool of active properties. It is generally agreed that 18 to 25% of the market is considered a balanced market. Anything under 18% is considered a buyer's market, and anything over 25% is a seller's market. So right now for single family, it's 21.3%. So 1 out of 5 single family homes across for pre-owned across Atlanta as a whole, 1 out of 5 are selling right now, right? So that's 21.3% balance. Take a look at townhomes, 16%, 1 out of 6 and change, 6.6%, and then 1 out of 10 for condos. So that's, we just got done looking at the condo chart with the year of supply for a lot of those in-town markets, the big buildings. Properties are just sitting there if they're condos. But if you own or want to buy a single family home, the strategy is completely different. Let's talk about tactics, right? So if you're a buyer and you want to purchase a condo because you want the condo lifestyle, you want the amenities, the proximity, the amenities the building has to offer, the community has to offer, the proximity to work, all that kind of stuff. Somebody else maintains everything for you with the building, all that kind of stuff. You can make some very aggressive offers on these properties, because if they don't take your offer, there's not a whole bunch of other buyers lining up to buy them. So I think you're going to see two things. You're going to see more, I've called them disrespectful offers in the past. I mean, they're kind of warranted when you have 12 months of supply for an asset class. There's no question, right? There's no reason if if you're pricing your property and you're pricing it really well, you might still be able to get your ask price, but you're pricing it really well. If you're trying to test the market and you're going for aspirational pricing and you're a townhome or a condo, but especially a condo right now, that's going to hurt you. And you're going to see offers come in quite a bit less. So as a buyer, you have an opportunity to get a condo for a lot less than potentially sticker price, right? Single family is completely different. In most of Atlanta, we just saw you're in competition. You might find yourself in a multiple offer scenario in some of these really strong districts. The strategy changes altogether. You need to look at what the last 10 sales have sold for, list to sales ratio to see how much properties are selling for off of the ask, what kind of concessions are sellers paying. And we're going to cover that too. I'm going to show you price cuts. I'm going to show you closing costs paid, like all that kind of stuff is coming up. But the strategy changes. You got to know the numbers and you got to be able to pull those out. And I think one of the big mistakes that's made is whether you're looking at data from a portal or from a brokerage even. I mean, there's a bunch of brokerages and brokers who put out monthly stat numbers out there. Like if you look at even this video, for instance, I'm talking about counties as a whole. And if you take a look at that county as a whole, the zips, as we've seen on these heat maps, differ from the county significantly, right? So you really need to drill down into the numbers to understand what they are to be able to leverage them to your advantage, whether you're buying or selling, is what it comes down to, numbers and knowing how to interpret and then make those numbers work for you, everything. So pending ratio. So yeah, I mean, big buyer's market for condos right now, there's no question. So pending ratio by county, if we take a look at single family, you can see here that Douglas 16.1. So 26. So Cobb is a seller's market, right? 25% is that threshold. We're at 26.9. DeKalb practically there. It's towards the upper of that channel, that 18 to 25, but that's still technically balanced. Cherokee 23, Gwinnett 21, Forsyth 17. So, and this is for pre-owned. We're not talking about new construction. If you're buying new construction, you have a lot of opportunities. You may have noticed that builders are offering a lot of incentives right now. So those are things that can be taken advantage of. But look at where Forsyth was just 2 years ago. Like how crazy of a seller's market was that for pre-owned resale houses, existing houses, right? 42% practically. Then last year it was 25.8. So still technically a seller's market. And now, boom, you're balanced. So at this rate of decline, is Forsyth going to find itself in a buyer's market? I mean, technically that's a buyer's market because we're under 18%, right? So is that going to drop down to 12, 13, maybe 10% this time next year? That'll be interesting to see. So that's pending ratio. Then we've got list to sale. So I just got done talking about single family and needing to understand what people are successfully closing on properties for. And it's 1.9% off of the original asking price. But townhomes, 2.1%. It's 97.9% of ask. And condos, 96.8%. So I mean, I mentioned disrespectful offers and aggressive offers for condos, but condos are still selling across the metro as a whole for resale at 96. So for a discount of 3.2%. But I promise you, you take advantage of those really high inventory markets, high months of supply markets, and you'll get a lot more than 3.2% if you are a good negotiator off of those prices. So by county, break it down here. You can see some drops here in Forsyth. I was just talking about that. Let's pick on it just a little bit more. 99.2 down to 98.2 down to 97.8. So you're getting on average a discount on single family of 2.2% in Forsyth. So it's not the biggest drop, but when you look at where the market's going, there's a lot of inventory. There aren't quite as many sales. It's a county that's further out. Now, there are things that are being done to make it feel like it's closer in, but it's going to take until, I think, 2031 to finish building that Georgia 400 construction that they're doing now and add the the expressway that's going to go up there to the Peach Pass. In the meantime, it takes longer to get there. And as we see with those counties that are further out, if they're the more expensive counties, people are choosing to buy closer in right now. So that's one of the things that's happening here with Forsyth County. Interesting. Now, dollar volume, you take a look here. It's basically, we're taking a look at this is all of Metro Atlanta for all of the different property types. The colors here, this is new construction. Talked about it last month. Everyone thinks that new construction is, no, new construction is very interesting for a lot of different reasons, but everybody thinks that it is dominant in our market. Now, $271 million worth of new construction sales in July is not an insignificant number, not even a little bit. We are a big market in the US for new construction. But you take a look at pre-owns, and that was 2.3 billion. It's practically 9 to 9.5, almost 10 times more. It's a bigger market, and as a whole, $2.6 billion worth of sales, which is down roughly 0.3% year over year. So it's a small drop. New construction, if you go back to July of last year, was at 267. So it's up actually a little bit for new construction. And resale is going to be down because if that's 0.3, that's down, we're at 2.348 this year. And if we go back to July of last year, it's 361, right? So that is down ever so slightly. And why is that? Well, because it's tough for a homeowner to offer $20,000 towards your closing costs. And also, oh, by the way, if you use our lender, you can lock in a 3.99% over the next 30 years, or we'll tease you with a 2-1 buy down for the first couple of years on your interest rate. It's harder for sellers to do that because you only have so many ways of slicing that pie to have enough money to maybe offer a buyer. We'll talk about closing costs, but we're at like 9 to 10,000 is what the average buyer is getting right now on across Metro Atlanta, but it's more on new construction generally. Builders have deeper pockets, and that's one of the games that they play to keep prices high in those neighborhoods is they make the incentives that much more appealing by buying down the rates and offering more in closing costs and other incentives. Sometimes appliance packages, blinds, other upgrades inside the property rather than taking it off the price. So moving on, dollar volume for pre-owned. This will break down the asset classes. So 2.1 for single family. And it's about the same for townhomes. You take a look, this last year was 1.74. They're up to 178 million rather. And then condos were 106 in July, and it's 104 now, so that's down a little bit. But townhomes, there are more townhomes or more dollar volume of townhomes that sold this year compared to last year. Now, 2.1 for 2.065 for single family and 2.080 last year. So single family, there's less volume being done across the whole metro on pre-owned properties there. Now, dollar volume by county. So there's more, and this is pre-owned as well. So we're only looking at resale. We're not factoring new construction and single family only. You take a look at Fulton. That's a big jump up. It's like roughly 20 million more dollars of volume in Fulton. Now it's funny, like that could potentially be like one mansion in Buckhead that sold, right? Like there were, I think, a couple of really nice sales actually, now that I think about it, in Buckhead in July that will certainly bump up that number. So everywhere else, kind of see some ebb and flow, right? So, all right, showings. Where is showing activity concentrated? So this is a chart that I like because it's going to compare showings versus actives versus pendings. So showings, we had almost 51,000 showings in the month of July. And you take a look at that from last year, they're up. It's another 5,000 showings. So there are a lot more people looking at houses this year than last year, quite a bit more than 2024, and certainly quite a bit more than 2023. That's like 16,000 more than just 3 years ago. Actives are about the same as where they were. Pendings, we're going to revise that number, but pendings, right? So even though there are more people out in the market, they want to see more houses before they make a decision. They know that those houses are going to be there and they want to make sure they're making the right choice. They're pickier than they've ever been, and rightfully so. When you got out of that 2020, 21, 22 market where if you didn't make an offer on the first house you saw, then it was going to be multiple offer on every house. That was not a way to live as a buyer. Buyers are, it's a more equitable market now. You're kind of getting back to like the pre COVID days of like 17, 18, 19, when you could breathe a little bit in the marketplace. Right now, that's not to say that you can breathe for every property. We clearly saw that there are some areas with months of supply that are way low, which means that if you try and breathe, I mean, you're going to miss out on the house. But it's, again, very sometimes street by street specific, depending on the area. Let's just leave it at that. So, nonetheless, that's a lot more showings. People are looking at a lot more houses year over year, and this is only for well, no, it's all property types and it's all showings. So, yeah. So showings by county, well, there are less active properties in Fulton, so there are less properties to go and see in Fulton. And if you take a look at the cab, there are less properties, but there are more showings. So that's interesting, right? There's more interest in DeKalb, and Fulton and DeKalb were following each other in terms of new listings coming to market. They were both down year over year. Active properties in the market, they were both down. Pendings and closings down as well. But showing activity in Fulton is down. Meanwhile, it's up in DeKalb. So there's more interest in DeKalb. Proportionally speaking, it's a lot more interest when you look at this chart here. Gwinnett is up significantly, 6,900. That's 1,200 more showings approximately year over year for Gwinnett. They're up in Cobb and up in Fayette. And then everywhere else, you've got some, you know, pullbacks, not big pullback, but in Forsyth County, they're just a little bit less. Now, this here might be my favorite chart in the entire data set because it really helps put into perspective reality. And sometimes it's an uncomfortable reality. The line in the bottom, the blue line, is showings per listing in a 30-day window for the typical single family pre-owned home in Metro Atlanta, the core Atlanta counties. The line that's all the way at the top are the showings to pending. So this is the typical property that's going under contract. How many showings had to happen in order for that property to go under contract? So if you're a homeowner and you're on the market, and you're kind of sitting there, lean in right now and listen to what I'm going to say next, because this might help you understand what needs to be done in order to change what's happening so that you can, hopefully increase the amount of showings. Because if you're at 2.7, or let's say even 2 showings in a 30-day window, you need to get to 10 in order to statistically find that buyer. So how are you going to have to wait 5 months to get an average of 2 showings a month? If the stats hold true, and that's how long it would take for you to find a buyer based on this. But what it really comes down to is price, condition, and marketing. I've talked about this in other videos, but condition is something that you as the homeowner have control over. And it's obviously the way that your property presents. It's if there are areas of opportunity with things that need to be fixed. Not everybody can fix everything or improve the house, renovate the house, because most people have their cash tied up in the equity of the house, right? So that's certainly a challenge. But price can overcome condition. So we'll talk about that. Marketing is something that the agent controls. So the agent that you choose to work with, every agent does different things for marketing, right? So if you're working with an agent who's helping you maximize your exposure, maximizing your marketing, you want everybody that's in the marketplace to know that your house is on the market, right? So your agent controls that. Price is how the market responds to the condition and to the marketing, but more heavily the condition. And they use the marketing to look at that, right? And they're deciding, are they going to come and see your house? Is the market going to accept your price and give you an offer? Or are they going to reject your price and not come and see it, but not offer, or not even come and see it? Now, we talked about getting very hyper local with these stats because this is 12 counties, 2.7, right? So you would want to know what is the showings per listing in your area, in your zip code, in your school district, within a mile radius of your house. And the tools that I have access to give me all that information, right? So you would need to look at that, and you need to look at what the showings to pending are, and then you need to see your situation. If you've been on the market for a month, did you get the average of what those showings were? Were you more or were you less? If you're more, how close are you to the showings depending in the area? If you're getting a lot of showings based on the feedback that you're getting, are you getting offers? If you're getting offers, but you're not getting to terms, then maybe there's a disconnect between what you want for the property versus what the market is willing to pay. And that's something that as a homeowner, you'll have to either wait for the buyer that's willing to give you your price, which could be a very long time, or you recalibrate your perspective on where the market is to make an adjustment based on what your goals are, right? That's one way of looking at it. But if you're not getting if you're under the showings per listing average for your area, something else has got to change. And if the condition is good, and the marketing exposure is maximized, it's always price. In this market, it's always price. And this is for single family, but it applies also for townhomes and condos. And if you're in one of those zips that has 12 to 12.5 months of supply, like over a year's supply, like price is going to be the biggest thing, condition and price. And then making sure that you're working with an agent that's giving you maximum exposure. Because when there's a buyer that wants to buy one of those asset classes, the way that this market is going, you've got to do everything you possibly can to find a way to get under contract with that buyer, especially if you're a condo, because it could be a very long time before the next buyer comes. That's what the numbers say. That's why the numbers are everything. Okay. So this is one of my favorite charts. I can break this down. I can draw a 1 mile radius around a property and look at this data hyper locally to understand what's happening. So very useful for making decisions. So showings per listing by county, uh, only 1.5 in Cherokee. Like, see what I mean about the northern suburbs, the ones that are like not even touching the perimeter, but are a couple of counties out, like Cherokee and Forsyth. Those are struggling. Cobb 2, Fulton 2.2. Where there's a lot of activity, South Side. So Clayton 4.0, Fayette 3.8, Henry 3.7, and then DeKalb is doing quite well. Last year was 2.5. This year is 3.6. So there's some good, like DeKalb is on people's radar right now. It's lower for new listings and actives and those things. But when you look at the other metrics, it's really fascinating to see. DeKalb's also huge. Like we'd have to break this down to know exactly what parts DeKalb, that sort of thing. But nonetheless, I digress. 3.6, that's still high. And then Rockdale. So all the south side plus DeKalb here too. I mean, DeKalb does have a south side portion. So moving on to showings depending, well, in DeKalb, okay, I mentioned 3.6, that was great. But right now in DeKalb, the typical single family pre-owned home needs 17.7 showings in order to go under contract. So yeah, interesting things happening in DeKalb, and that's certainly an interesting statistic. That's a lot of showings needed to go to. A part of that is because I mentioned that inventory is lower. There are a lot of people looking into DeKalb, so those amount of showings, which are up year over year. Remember, Fulton they were down, but DeKalb they were up. Even though Fulton and DeKalb were lockstep for inventory, new listings and actives, right? So they diverged when it came to showing activity. So this looks bad, but at the same time, it's because there's so many more people looking in DeKalb right now that those showings get spread over less houses, and it makes that stat, especially on pending properties, go way up. That's another way of looking at that. So, all right, showings. So townhouses. So we were looking at single family for townhouses. It's 1.4 in a 30-day window across Metro for pre-owned core Atlanta counties, and you need 4.9 in order to attract that offer. And then condos is 1.2, and 4.2 is what's needed to go under contract. Not terrible, right? Like it's not a terrible ratio. Okay, price cuts. Everybody loves price cuts. Here's what's happening. Well, sellers don't like price cuts. Buyers do. But okay, so Greater Atlanta, half of all listings that are single family resale properties right now have had a price cut, one or more, 50%. The average price cut is 5.6%. So if we break it down by county, Fayette and Forsyth both have quite a bit more than what that 50% average is. You're looking at 57 and 56%. And right around that 4.8%, 5.2% is the average cut of the properties that were cut in those two counties. The biggest cuts on this list belong in Rockdale. So again, almost half, 46%, but the listings that cut in Rockdale cut by 7.4% on average, bigger cuts. You got 7% also in Fulton. So those are big, 7.1% in Fulton. Those are big cuts. So if you look at these are for actives. Now, the next one shows us pendings. So what did properties actually need in order to attract that offer and go under contract? So if you look, for example, we talked about Fayette, 57 and 4.8. They really needed 7.2% in order to go under contract. And there were 52% of those properties. So you're always, not always, it's not 100%, but typically speaking, you're going to have less properties have price cuts when you're looking at pending properties because they were potentially priced better and attracted that offer and didn't need to go through as many cuts. So that's why the percentage is going to be less on um, pending versus active for the number of properties with cuts. But some of these cuts are a lot bigger. So I talked about Fulton was 7.1%, but the typical property that went under contract needed 8.7% to go under contract. This is for single family. Remember, I was mentioning condos and it was like list to sales ratio was like 3.2. And I'm like, hey, in some of these zips, you can make disrespectful offers. Well, this is single family. And you can see 8.7% is what the last cut was. And then list to sales is going to show us from what that was to what the final price is. But you can see that sellers, it's looking like sellers are starting to come to terms with the fact that aspirational pricing, which means pricing and testing the market at a price that is above what the market's willing to pay, is a flawed strategy that's not going to work anymore, right? And so people still start there, but then they have to cut, and these are big cuts. Now, if we look at the dollar amount on them, in Fulton, the typical cut is $54,000, and that's on active properties. If you look at the pendings, 68. So that is a lot of money. Now, if you're going to watch more videos today, YouTube definitely thinks you should watch this one next. Thanks so much for watching and I hope to see you on the next one.